Good evening. I'm John Batchelor. This is the John Batchelor Show. The market's down 6 days in a row in New York. Overseas, they've been down 7 million years to look at the faces in China and in Japan. And Europe is watching between these two poles as to what's going on. We welcome tonight two men who are very careful to explain what we see and what we will see in the immediate future. Larry Kudlow, my colleague and co-host of CNBC as well as Kudlow Radio on the weekend. I welcome you, Larry, tonight because this is a time where we break the glass and call on Steve Moore. When the markets are down 6 days in a row, does the Heritage Foundation, Steve Moore, come into bear. Good evening, Stephen, and good evening, Larry. I begin with you, Larry, because my understanding is that this turmoil in the global markets has to do with something you very carefully explicated these last weeks and last months. A weakening. Where is the weakening, Larry? Good evening to you.
Good evening, John. Well, I've argued till I'm blue in the face that if you use a commodity price rule to guide monetary policy, all the major commodity indexes in dollars have been falling. Gold, too. Oil, too. And the dollars are going up, and the Treasury break-even spreads on inflation down. And I say, if this were a normal period where we didn't have a zero interest rate and you looked at these market indicators, you'd say the Fed should ease, not tighten. So I've argued that they should move at the speed of an injured snail. And I think that, by the way, I don't think they're going to move at all in September. I don't think they should. And I think that when the minutes came out, we'll leave China for, we'll get to China later, but when the Fed minutes came out last Wednesday, I believe, for the month of July, the clear implication was that they were not ready to raise the rate. They recognized correctly that there is no inflation. And I think a lot of market investors looked at that and said, well, guess what? The U.S. economy, no second half snapback. It's weaker than we thought. And I think, John, that was the first peg into this market correction.
Good evening, Mr. Moore. Market correction, that's a polite term. Consolidating at lower levels is what I remember from the 20th century to make everybody feel better. 6 days in a row, Steve. Is this a trend like 08, like 97, 98? Do you have an analogy for us?
Well, first of all, something that Larry said struck me is, when he said the Fed was overestimating growth for the second half of the year. And truth is, the Fed has overestimated growth now, Larry, as you know, for 5-6 straight years. I mean, they keep thinking that all of these stimulus plans and all of these monetary quantitative easing plans will generate growth, and none of it has really worked. And so I think we're in this kind of very sluggish economy where Washington is doing almost nothing to help. And my attitude is I don't think it matters that much if the Fed raises rates by a quarter point or keeps them where they are. That's not going to solve our problems. I think our problems are more fiscal, they're regulatory, they're just an anti-business, kind of culture in Washington that's holding back growth. Now, when it comes to the global situation, I think what's interesting is what China is doing. I'd love Larry's thoughts about this. I see China basically lowering interest rates, debasing their currency a little bit by their actions last week, and then they've got these massive stimulus plans. They keep building these Potemkin villages with shopping malls that no one goes to and skyscrapers that aren't inhabited, and that's not real investment. I think China needs a dose of free market economics, privatization and tax cuts and more free enterprise. And I think these actions by the Chinese government and the central bank are not going to bring back the growth that China has become used to.
I just want to say to listeners who may and are probably investors not to panic. All right?
I agree.
Corrections can be healthy.
Yep.
We've corrected about 11%. We haven't had a correction since October 2011. And there is no recession, in my judgment. I could be wrong. But I see no recession, nor do I see any boom, nor do I see any inflation, as I said earlier. Interest rates are going to remain very low, and gasoline prices are coming down. So these are good things. We will wait with great attention to third quarter profits, which will start coming in a few weeks. That's going to be really, really important. On China, Steve, I don't agree on the yuan depreciation. I think they did the right thing. The yuan has been up 35% in the last 10 years, and with the dollar rising this year, they couldn't keep the peg. They couldn't keep it. It's only at 3% depreciation. But your other point is really important. The Chinese communist planners are trying to bail out the state-owned enterprises, the SOEs.
Yep.
Instead of privatizing them, Steve, like they promised, they're bailing them out. They're forcing banks to give them loans. That's money being taken away from private sector market entrepreneurs. They're also really telling the banks what to do in terms of allocating credit, more communist planning. They lowered interest rates and reserve requirements. It probably isn't going to be enough. But, my pal John Rutledge, who knows an awful lot about this, teaches at the University of Beijing. John is arguing, I think correctly, that China's moving in the wrong direction, Steve. The free market movement, which was so good to them, it just kind of looks like they're moving backwards now.
That was my point. I agree with you, and I agree with John Rutledge. I think they don't completely get the free enterprise thing, and whenever they get into trouble, they think, the central planners and the communists in Beijing can push on this level or push this button and everything's going to be all right. I just wanted to reiterate one thing Larry said, because I agree. I think stocks are cheap right now. I actually think you don't sell stocks in a market that's fallen like this. I mean, if anything, I would say there's buying opportunities because look, American companies are still pretty profitable and they're still pretty lean and efficient and productive. And so I haven't lost faith, John, in the American economy, although I do think Washington is a drag on the economy.
Let me begin then to go in another direction, which is that a term of art you've both used over the last months, exit strategy. Does the Fed have an exit strategy? If we know what it is, will that give confidence to the markets? Larry?
Well, look, the Fed has an incomplete exit strategy. I mean, the Fed wants to, quote, normalize interest rates.
Right.
That's one of the major steps. There are other issues. And, they'd love to do it, John. And a month ago or 6 weeks ago, you had a Fed consensus that we would start in September with a small quarter point, maybe do another quarter in December, and another full percentage point in 2016. The trouble is, as Steve said, the Fed's estimates are always too high, both on growth and inflation. Now, I don't want any higher inflation, but we do need corporate tax cuts and deregulation for growth. That goes beyond the Fed. So that's their exit strategy, John. The trouble is they don't want to do it unless the economic evidence tells them to do it. And, they don't have any strict monetary rules. And they're I think they're going to be on hold. All right, that's my hunch. For the month of September. I may be wrong. Maybe they'll make a move. Steve is right. A quarter point is not the end of the world. It's just that they have to raise rates. They have to normalize, John and Steve. I just don't know that they have to do it right now.
Right now. But, Steve, you mentioned the question of regulation and the Obama administration. Is that weighing on everything, Steve, because of the unanswered questions about the next presidency? Has everybody got an eye on 16 now, and that's why we're this sluggishness? Or is the sluggishness a product of the Federal Reserve? It's chicken or egg question I'm asking you, Steve.
No, I don't think that. Look, I think, all of Larry's friends on Wall Street obsess way too much about what the Fed is doing. And my point is that you can't fix bad regulatory policy and bad tax policy with money creation, or, either adding or subtracting money to the equation. I mean, the problem is on the fiscal and regulatory side. And look, I think right now, I say this as a supply sider, an even bigger problem than the tax burden, and that is a problem. The corporate tax obviously should be cut. But when I talk to businessmen and women, they say the biggest problem they're facing, John, is the regulatory assault. Mm-hmm. And it's whether it's Dodd-Frank on the banking side or whether it's these energy regulations. I mean, my goodness, here we are in an economic, potential economic crisis. The stock market has fallen dramatically over the last few days. And Barack Obama is running around the country, Larry, talking about climate change. I mean, the guy is nuts.
And subsidizing renewable energy when oil is through $40 a barrel.
Exactly.
Yes,
it makes no sense. That makes no sense.
Do you want to wait till the next segment? Because I want to bash the campaign.
Yes, I do. We'll come back. We'll come back. Well, Larry Kudlow in a very good mood. Steve Moore in an equally good mood now that we've broken the glass. And Mr. Moore, we've conjured up Mr. Moore on 6 days in decline of the bull market on Wall Street, and the questions about the U.S. economy into the remainder of 2015 should weigh on the campaign trail. We'll speak of that when we come back. I'm John Batchelor.